Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at some of the dangers that are lurking in the Bitcoin charts. So what I'm going to do is I'm going to run down on some of the time frames in the Bitcoin charts just to have a look at the overall picture to get a good idea of where the price of Bitcoin is going to be heading. Some people saying there is too much noise around the $12,000 mark, which means that the contrarian view will be right, i.e. we'll be going up rather than down. So we'll have a breakdown of those time frames and see exactly what the charts are telling us. And the biggest question is, of course, have we bottomed out at 17,500 or are we going to go much lower? Okay, so if that sounds interesting, then without further ado, drop everything, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember, all of my videos are for purposes of education only. They're not for financial advice, so please do your due diligence before you make any important investment decisions. These videos are simply my perspective of the charts to add value to those who are watching. Okay, so I'm going to begin with this comparison chart of the 2018 bear market where we topped out at 20,000. We had this 12-month bear market down here before we made a W pattern and went on to this bull run here. And I've been comparing that bear market for 12 months with the current bear market where we topped out at 69 and have been in the last 9-10 months on this bear market as well. And the interesting thing is, of course, that we're making a very similar pattern at the bottom of it, having done exactly the same as the 2018 market before the W pattern, the double bottom pattern seems to be emerging here. So I want to give you an update exactly where we are from this pattern in 2018 over here before it turned back into the bull market in 2019, and is this something that we're going to repeat over here? So as you know, if you've been watching my videos, that the white line here is the 50 simple moving average on the daily chart, and the green line here is the 200 simple moving average on the daily chart. And what we're doing is comparing the 2018 market up here to the current bear market down here. So when we lost the 50 simple moving average over here, we can see that we came down and had a consolidation period over here. Very similar back in May this year, where we lost the 50 simple moving average, came back and did the consolidation over here. Then there was a final capitulation to the 3,100 low of that bear market back in 2018. Similarly, the current low has been 17,500 over here. And since then, we made an attempt to get above the 50 simple moving average over here, and similarly over here in the current market. In 2018, we lost it after a few days. Here, after many days, we lost it, but we still lost the 50 simple moving average. And in 2018, we made another attempt here to recapture it, just like we've just made an attempt over here to recapture the 50 simple moving average back around the 12th, 13th of September. But in 2018, we got rejected again there, and we've now recently got rejected over here. So this is where it gets critical. In 2018, the next attempt actually succeeded after an initial fall, and we are currently here trying to get back above the 50 simple moving average. And the biggest question is this pattern going to repeat over here? The honest truth is that nobody really knows. Bitcoin has a habit of going along with a certain pattern, and then right at the very end, when you think that it's going to do one thing, it does completely opposite. So only time will tell, but certainly this is where we're at. We certainly have made a low at 17.5, which has been holding all the way along here. And I remember when we were in this part of the market, that when we were getting to these levels here, everybody was expecting the price to go to 1,200 and 1,800. And currently, it's the same sentiment that's driving the market. A lot of people, the majority, seems to think that it's going to go to 12,000. So we'll just have to wait and see. But my overall feeling is still that we've bottomed out at 17.5, and we're just trying to put in a second bottom around here, just like we did over here. However, there are things in the charts which I need to bring to your attention which may go against that grain that we've bottomed out at 17.5. These are things to really look out for and keep in mind, because we're coming to the end of the month now, tomorrow, and we really need the current month's candle to close well above this 19,700. And the reason for that is this. This is the monthly chart. And what we've got here is the previous all-time high of 19,800. And if we bring this line here all the way across, to the bottoms of these candles here, we can see clearly that this current candle here, the September candle, if we have a close look here, we can see that the bottoms of these candles, because it's on a higher time frame, are extremely important that we keep above the bottoms of these candles here. And the current candle at 19,300 is actually about to close below it. So we've got today and tomorrow to go. So keep your eye on this. Should we close below this neckline here, it increases the probability to go to the downside. And that's where we could quite easily go around to the $12,000 to $14,000 mark. On a positive note, on the monthly chart, we have fallen below the 8 EMA, the 8 exponential moving average, which is the blue line here, the blue average line, on several occasions in the past. And as you can see, they were actually historically now the greatest buying opportunities for Bitcoin here. So these were the 3 opportunities before where you could really make all the money. And now we are exactly at that point here. So should we hold the 19,700 level, we could quite easily begin one of these big runs of the past from a bear market low. And if we look at the RSI down here, you can see quite clearly that we have never been to this level of the RSI dropping. Currently we're at 37 here, and the lowest we've been before was back in 2018 when it was at 39, and the lowest we've been before that was at the end of that bear market in 2014 and the beginning of 2015 at 40. So the current RSI is presenting the lowest RSI that we've had. So is this where it's going to turn around? Only time will tell, but it's something we need to be aware of. The second danger in the charts I see is this log growth curve chart here. Not only are we in danger of falling below this very strong support line at around about the 19,700, 19,800, but these log growth curves has contained the price of Bitcoin for the past 11, 12 years. At the tops over here and at the bottoms over here. And only in the COVID situation did we manage to get out of there, but that was bought up very, very quickly, virtually the following month. So currently we find ourselves in this situation here, where we've fallen out of the lower part of the log growth curve. How far this will fall, only time will tell, but certainly this is totally unprecedented in the history of Bitcoin. And this is a real danger sign. It's a severe warning for those who want to take risks here, and it all depends on people's risk reward ratio. The next time frame I want to look at is the weekly chart here. Once again, I want to have a look at the 8 EMA all along here, this blue line. As we can see, once we'd topped out at 69,000 and broke down the 8 EMA, we had many attempts to recapture it, but got rejected several times. And the only time we broke above it, we came immediately down within the next couple of weeks. And since then, we made many attempts to get back above this line here. And each time we have been pegged back down. And currently, as you can see with this current candle here, in the last few days, we made another attempt to get above it. And once again, we got pushed back down again. So this dominant trend that you see is continuing. And until we see some signs of some strength, and one of the first signs will be that we get above the 8 EMA on the weekly chart, which is currently at around about 20,400 mark. If we can do that next week, then certainly we can start the move to the upside. And then that pattern from the 2018 bear market will continue to be followed in the current market. However, if you look at the neckline here currently on this weekly chart, and if you look at the bottoms of those candles there, we can see quite clearly that the bottoms of these bodies of the candles was actually pierced down here. So we've broken down this neckline and we're currently making an attempt to get back above it. And these are what you call tweezer bottoms. And this is quite a bullish development. However, it can also be construed that once you break a very solid pattern like this, a very solid neckline, the price makes an attempt to retest that support line as resistance, and it could quite easily come back to the downside. So let's see what happens, but certainly we have broken down here, and if we have a look on the daily chart, that's telling us another different type of picture. Once again, as you can see with the 8 EMA, once we lost it here, back in August, we made many attempts to get back above it. And when we did, we went on this relief rally up here. But since then, when we lost it here in the middle of September, we made several attempts to get back above it here. And in the last few days, we've been toying with it over here. So currently, we made an attempt on Tuesday with this long doji candle, which as you know is very bearish. And yesterday we managed to get above it. And today, this is looking quite bullish for Bitcoin, that we're managing to actually stay above the 8 EMA. So the rest of the day we have, whether it's going to fall below it or not, or are we going to capture it? However, the bigger picture in this pattern here over the last few months is this, and not many people are talking about this, is that we have a head and shoulders pattern here. We can see quite clearly that we had a shoulder here, a head, and we've just made another shoulder here on the right hand side. And in the last week or so, we have fallen below the shoulder line here, but the bulls have come back in and actually pushed it back up above this neckline here. But this head and shoulders pattern has a very high probability of playing out. And we're talking about anywhere around the 75% mark. So this would suggest that we have a leg down to go down towards the 12, 13, 14,000 mark. So we must keep our eye on this pattern here breaking. I think if we break the $17,500 mark, then it may well have a free fall to the downside. But only time will tell. So as we can see, there isn't very much bullish news in the Bitcoin charts, and we really have to be aware. We can't just be permanent bulls looking at things with rose-tinted glasses that the market is going to go up. We have to be aware of the dangers that are lurking in this chart. But having said that, as we know, the contrarian view often applies to Bitcoin. When everybody's thinking that there are dangers in the charts, that's when the bullish patterns start to emerge. Okay, so we'll leave it there. I won't have time to do the wisdom bites today. I'll try and do that in the next video. If you found value in the video, then please do remember to like and subscribe and to turn on the notification bell. Quite a few people have said that they're not getting notifications, so please do remember to subscribe and to turn on the notification bell here and click the all button so that you get all the notifications when I do the videos. Okay, so we'll leave it there. If you have any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.